And I've got check marks, Cato. That means we're live.
Sounds great.
And so just waiting here now for a few people to start filing in. It's going to be an exciting show. We're going to be talking about small business loans. We're going to be talking about peer-to-peer lending. We're going to be talking about FX, and we're going to be talking about moving money around different currencies between different countries. It's going to be interesting. And I'm going to run the intro as I see people are starting to file in here. 1 second. I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it. Awesome, everyone. Thanks for joining us today. I've got Cato Pastoll from lendingloop.ca. How are you doing today, Cato?
Great, and yourself?
I'm doing really well, and I'm really excited to be having this conversation with you today because very rarely do we get to speak to anyone who actually has a behind the scenes view and opinion of what happened in 2020 with the lockdowns and everything, and the impact that it had on small businesses. I personally, I was aghast when the government just started to close down whole sectors of the economy. I understood that there would be knock-on ramifications that would be hard to imagine. Like the inflation, supply chain issues, manufacturing issues, microchip issues, all these things that we're suffering from today, all stem from some of those activities that were happening back then. And I think the best thing for us to do is just to start off and have you introduce yourself to everyone. Why don't you tell us who you are and what Lending Loop is, and we'll start at that point.
Yeah, for sure. My name's Cato Pastoll. I'm one of the co-founders. I'm the CEO of the company. And we originally, as you said, were founded a business called Lending Loop, which is essentially a peer-to-peer marketplace or loan platform. What we do is we basically allow individual investors, so people like yourself and myself, to invest or lend money to small companies that are seeking growth financing or growth capital. So companies all over Canada would be looking to expand their business, open new locations, buy inventory, do renovations, all that type of stuff. And they have a hard time getting access to that capital from some of the traditional players because they're too small, too asset light in terms of the type of business that they operate. And so what we did is we created a marketplace that made facilitation of capital a lot easier so that those businesses could access financing and funding. And lots has happened since then, but I'm sure we'll get into that further in the show.
And just for everyone's curiosity, I mean, I had you on the show when you first got underway, and that was several years ago. And probably around 2018, I signed up and started to become a Lending Loop investor. And I was just curious about the whole process. So I started to put $25 into different loans as they came up in the marketplace, just because I wanted to see what would happen and see, and over the course of time, I got to experience people steadily paying off their loan. I got to see a few people get behind on their payments and then get caught up. Only had one case of somebody, sort of defaulting and not paying it back. But then I was curious to see how it would unfold, like what the process would look like. And then the pandemic hit. And, initially I thought, oh my goodness, a bunch of these businesses are going to have a hard time paying their loans. And some more of them did get behind for my own portfolio. But what surprised me was the number of loans that suddenly got paid off. Can you share a little bit about what sort of happened on your side? Because I would imagine the pandemic was one thing, and then the government response to the pandemic led to a whole other series of events that probably had an impact on the loan portfolio there.
Yeah, absolutely. And to your point, my thought initially in March 2020 was the same as yours, which was, my next months and years ahead are going to be about managing defaults. But What ended up transpiring was quite different to that. So, unfortunately, with all the government shutdowns that occurred, the demand for capital immediately disappeared because companies were no longer looking for growth capital or growth financing. The need for companies to do expansion, or the will for companies to even expand their businesses, essentially disappeared overnight as they were kind of forced to close their doors. And so the immediate thing we saw was applications and volumes of requests just kind of fell through the floor. Following that, there was definitely a lot of uncertainty for the next few weeks as companies were thinking, into the coming months, what was going to happen. And there were definitely companies calling us saying, what are we going to do about this? Can we, is there the possibility of payment deferrals? And so we were having a ton of conversations with companies along those lines, hundreds and hundreds of those conversations on a weekly basis. And ultimately, as we now know, what happened relatively soon after was the government stepped in with a number of different programs, starting really with the CEBA program, which was this kind of $40,000 interest-free loan, which essentially any company was eligible to receive, and that just basically poured capital into the business community and into the market at that specific point in time. Many companies use that as a survival lifeline. A lot of companies didn't need that capital, and so they just had an influx of capital and started repaying their loans, which is what you were describing. So we saw a big influx of repayment activity where companies, got financing from the government interest free. They were sitting on cash and were like, I'm obviously going to pay out my interest bearing facilities and keep my interest free ones, right? So we saw a pay down of the book, and many companies start to think about different ways to finance their business going forward. The one last thing I'll add there is that unfortunately for us, and we'll get into kind of what that meant for our business, but unfortunately for us, the government chose not to include us in any of those programs, at least from facilitating them, which is quite different than the experience of our peers in the US and the UK, Australia. All of those markets involve the fintech lenders in the
Mm.
participate or distribution, basically all of these kind of government-backed loan programs. The US, notably the PPP program, was kind of broadly distributed by fintech companies. Here, it was solely distributed by the big banks, and so as a result of that, that actually was negative rather than positively impacting your business. It quite drastically negatively impacted our core business.
And I want to draw everyone's attention to some key words that you said there. You talked about the demand for growth capital, because Lending Loop is not a platform where anyone can just put up a loan request. They have to go through a little bit of an underwriting process. You have to approve their access to the marketplace of investors. Why don't you touch a little bit about what you look for, because it's not just anyone who wants to start a business or buy a business or anything like that can access this marketplace of investors. You have to meet certain criteria, correct?
Yeah, you hit the nail on the head there. And what we basically, what we saw was not necessarily a decrease in demand, to your point, for just capital, because there are a lot of companies that were maybe like looking for survival capital. But for us, we put every business that applies through a rigorous adjudication process or underwriting process where we assess the credit risk of that company. And so the shift happened where companies that were looking for growth financing, which is kind of what we mainly supported, disappeared, and so we were left with kind of companies that were looking for essentially stopgap or emergency financing, which is really not what our platform was built to support. That's what programs like the CEBA program and the BCAP
Mm.
program were built to support. So we ended up referring a lot of companies in that category to other financial institutions who could provide capital to those companies for that specific need.
So and now we're talking. It's May of 2022. It's been more than 2 years. Have things started to change on that front? Are you starting to get more applications come in?
Well, I mean, we as I'm sure we'll get into, we've launched a number of new products for our business, and so even last year in 2021, we started to see a pretty big change in business as we kind of shifted our focus from an industry perspective. But talking specifically to the kind of traditional SME um, cohort, I'd say it's been kind of lumpy. I would definitely say we're into the recovery phase, but I wouldn't say by any means that it's back to where it was kind of pre the pandemic. So, we've seen kind of ebbs and flows as restrictions come and go. The longer a restriction is gone for, we definitely see, a gradual like kind of recovery in terms of like business requests for financing. But we're still not at this stage seeing the same level of demand, in May 2022 as we were in, February 2021. But generally speaking, for our business, we're now providing other streams of financing. So, overall, from a financing perspective, we're kind of now back to kind of standard operations, I would say, our own business perspective.
So part of the work that I do is people hire me to analyze companies and figure out what companies might be worth, et cetera. Um, and probably towards the middle or end of 2020, I actually had my first opportunity to analyze a company that had an outstanding lending loop loan on its balance sheet,
Very cool.
and it was very interesting. And I spoke with the owner of the business, and he told me it was his third lending loop
Okay.
loan, and he was involved in construction as a sub trade. And so, whenever he bid on these large, multi-million dollar projects, it exceeded his own ability to float, the cash flow of those deals. And so, he had learned that Lending Loop was a good place to go, and he'd borrow from there. And then eventually, once the general contractor and all the holdbacks and everything was released, he would get his money. He would pay off the loan, and he was on his third try at doing that, and had great success with it over time.
Yeah, that funnily enough, that's actually was one of the more popular ways through which people access financing through us. So I'd say probably about 20% or so of our loans kind of fell into that category, of kind of, you can kind of call it like hold back financing, because as you said, they work on a project, but they have to wait to get paid on it, and they also have to put a lot of upfront capital investment into getting the job done. So that is definitely a quite a common use case for financing.
We've got some people filing in. We've got Kevin joining us from Central Florida. Good to see you, Kevin. And as always, everyone, if you put some comments in there, Cato and I will get to them, and we'll be able to answer your questions as we move along here. And so I asked you about how things were changing, and you were talking about how sort of the demand is kind of lumpy in your underwriting process. Or have you become more sensitive to businesses that might be affected if there's ever another mandate or shutdown of businesses? Like a lot of people around the world are kind of acting like C-19 is behind us, but it's sort of now this new business threat that no one ever thought of before, of course. But now everyone in the back of their head is kind of like, well, do I invest in growing my business or expanding my business? What if I always say it's the Decepticon variant is going to come along, right? And suddenly these rules are going to come back. Is that something that you are now thinking about when you're underwriting these deals?
Yeah, absolutely. I would say, like, generally, unfortunately, from a business perspective, but it's just the reality of the world that we're in right now. We had to make that decision very early on. So, way back in March, April 2020, as we kind of like figured out how we were going to continue to lend, despite the fact that the volumes were lower. Through that period, we definitely made a lot of adjustments to the way that we looked at risk. And really what that comes down to is just kind of weighting certain variables from an underwriting perspective, perhaps more heavily than we would have before, which are related to things like what's the impact of a shutdown, and what is our risk appetite, just from a total risk perspective. I would also say, if there are companies that were like more on the fringe of financing, and I'll to be specific from the lending lead perspective, the way that, if you go back to I probably spoke about this in our interview, 5 years ago, but we have a grading system that rates businesses from A through to E. And so, like your A, B, and C companies, just to put perspective on that, will probably still be able to just get financing through us. But, your DE companies definitely will unfortunately have a harder time, just because, of the nature of the risk of the environment has to be reflected in our underwriting models, right? So we definitely have become a little bit more tight when it comes to adjudication, both on a specific, industry by industry basis, but also just on a broad based scale, because I do still anticipate, even despite the fact that these loan programs came in from the government and that was all this emergency subsidies and funding, at some point we are going to continue to see an increase in delinquencies within the traditional SME market. That's just the kind of nature of what happens when you go through a business cycle, and I think we're kind of trending a little bit towards that right now.
Well, one of the things I wanted to ask you about, in fact, is, and thanks for bringing up the grading system, because you've got like A, B, C, D, E, and then there's pluses and minuses, I think, as well for some
Yeah.
people. So when you set up that grading system, you obviously created some sort of risk measurement matrix points or something like this, and you probably had a certain expectation of default or delayed payments, et cetera, with each asset class. So I wanted to ask you, when the lockdowns occurred and everything, um, like how accurate did your system turn out to be? I mean, did people behave within the parameters of your expectations, or of your initial risk rating system?
Yeah, I would say it's been consistent pre lockdowns, but also during the pandemic as well. So, if you look at our loan performance data, which we post all of this publicly, so it's out there for everyone to see. But the grading system works in the sense that our A plus companies have the lowest default rates, and our E companies have the highest default rates. I would say also the other thing we saw is that your DE categories, your kind of like highest risk businesses, which tend to represent companies that have a lot of leverage already. Like that, I mean, that's not. I don't like to categorize only one specific variable that puts someone in a DE bucket, but that is something that I would say like is a general
Hmm.
categorization. Those companies definitely we saw disproportionately a higher increase in delinquencies and defaults over the last few years. As things have transpired, but that wasn't even necessary. Like I would say, it was already starting to trend that way. Even in 2019, that it was a little bit higher. And so what we've seen is actually like our ABCs kind of have been above expectations, and then our D's and E's have been at or below expectations from a performance perspective. But all of that comes in to say that the grading system obviously worked, and on an absolute basis, kind of the system worked as it was intended to, and continues to work as it was intended to. But I think any kind of cyclical events tend to impact those that are most on the kind of fringes, or highest leverage at highest risk of defaulting disproportionately higher than others. And that was another reason that we made that decision, like I said, to kind of tighten lending even more so for those that are on that outer side of the spectrum, and concentrate our efforts on kind of continuing to provide the service to higher credit quality companies.
And since the pandemic, has the awareness in the SME community about this option continued to grow? Like, are you seeing that this is a growing business, or are you still kind of in the shadow of the big banks and more traditional kind of finance operations?
Yeah, I mean, I think that almost segues in a bit to what we're kind of working on next. But I mean, just to quickly try address like the question directly. I would say like we were definitely challenged by the fact that, like I said, the government programs were not administered through us. I think that was definitely a
Mhm.
big blow or hit to the sector. And obviously very disappointing given that it happened in all these other countries in the world, right? So I would say that definitely did not help build any awareness, or did not help build credibility to the sector at all. And so, as a result, we decided to kind of start to broaden our product offering to go beyond just offering credit and financing to companies, but rather offering a wider variety of services, really fundamentally to try to become the primary financial relationship that companies have. Right? I think historically, you know, as a lender, people often viewed us at a point in time or need of like, I need a loan now, like you said, like I have an immediate capital need, so I'll go search for capital options. And so you've got to be there at the right place at the right time with the right rates and the right deal structure to get a deal done. And I think we have the ability now to build a much deeper relationship that goes beyond capital, and that really kind of like is one of the key reasons that we decided to kind of broaden our product offering.
We've got a comment here from Chris. He says, "Thanks for the great conversation and information. Thanks for joining us live, Chris." And again, anyone put comments in and questions. Cato and I will be getting to them as we move on. But so let's talk about that. You're expanding. You started off just in the debt and lending field for small businesses. Now you want to have a greater financial relationship. So when I think of a bank, my business has a bank account, obviously, and I'm in there all the time. and it's money's coming and going, and it's a place where payments arrive, and I go in there and I've got a credit card and I pay that off and stuff. So are you did you make it your goal to try to emulate that kind of functionality that people are getting from the big bank, and find a way for you to do it in a better way?
In a sense, yes. And so as you can probably see from my name here on the on the bar, Lending Loop has become Loop, and so with Loop, which is kind of our new platform that we've developed, we're offering far more than just credit or lending. We now offer the ability for you to get paid in different currencies. So you have the ability to actually receive money into your account with us. You can make payments anywhere in the world from those accounts. And what's really important, like, is we make this process of getting paid and making payments, which is basically what you use your bank for in a nutshell, a lot more seamless, with a lot more friction and a much lower cost than you would usually incur using a traditional financial institution. So, just to give you an example, many companies today, this is a small but silly thing. If you need to wire money to a supplier in the US, you've got to go travel into your bank branch, go ask the teller to make a payment. They charge you a $50 wire fee. They charge a 3% markup on your FX fee. All these crazy things just to like make a simple payment. And so those are the exact type of things that we are trying to eradicate, from the current way that kind of banking is done, and provide a platform that makes it much easier to run your business overall. And so by doing that, we hope that companies will trust us to kind of manage a broader set of their finances than just purely, when they're looking for capital.
Yeah, well, I mean, listen. Let me tell you the story of me and my books. I mean, I've got several different books up on Amazon, and I get paid royalties from Amazon in U.S. dollars. And originally, I had set them up so that it would be deposited into a bank account I have here in Canada, not fully understanding everything that was going on. And when I sat down and analyzed it, I realized that my own bank and the FX fees and the markup on the fees, like you're talking about, it was costing me like an extra 4% off the top just to have the money deposited in my bank account here. Whereas if I were in the United States, it would come through as an ECH payment. There'd be no fees at all. And so, I mean, this was years ago. I set this up probably 6 or 7 years ago. I actually drove to Maine, Holton, Maine, and went into the Machias Savings Bank, and I opened up a bank account there. And now those royalties get deposited there. But that was, the solution available to me at the time. And now, I guess with Loop, I'd be able to have a Loop account. The money would be deposited somewhere in the States, but then it would be within the purview of my control immediately, correct?
Yeah, you got it. And just to kind of like build on this, this problem that you're kind of speaking to is a very pervasive problem for any company that is either an importer or exporter, which Canada has a whole lot of. Because as a Canadian company, with it being a relatively small market, oftentimes you're either importing, inputs for your company from other markets, whether it's from China or from parts of Europe or other parts of Asia, to kind of like build, the products or services that you're creating, and vice versa, because it's a small market. Companies are also often exporting their products or services to other markets, selling stuff down into the US. So this problem, when it comes to our financial system not being a, inherently global financial system, our banks are native to Canada, is a really big problem for a lot of entrepreneurs, and ends up in a lot of friction and a lot of wasted time. Some of the stories that I often tell from people I spoke to, which are crazy but unfortunate, is, during the heights of the pandemics, of the pandemic, as companies were, struggling to figure all this out, they were calling their bank and asking what they should do to get their USD payments into an account, and they would say, drive down to Buffalo, to the branch over there. Difference during the pandemic was the border was closed, so it was like, thanks for the advice. I actually can't cross the border because I'm not allowed to right now. So this problem of kind of managing your own money in a cross-border way, getting paid in the U.S., keeping it in U.S. dollars, being able to make payments to people outside the country, is a really big issue for a very broad set of companies. And so that is like the specific problem that we've chose to focus on or target, because it's something that traditional banks do particularly badly, and it's something where we feel we can offer a really compelling point of differentiation to save people time and money, frankly, when it comes to doing their day-to-day banking.
Yeah, because I mean, when you think traditionally about a bank, I mean, originally it was a safe place to keep your money, and then it was also, well, we're going to earn interest on our deposits. Well, we don't earn interest on deposits really anymore,
Yeah,
and you know, like like if people operate within Loop with their money, the money ultimately is in banks somewhere else, right? It's
correct.
controlled through a system that you've built that kind of lays on top of those accounts, correct?
Yes, you got it. So yeah, when your money is stored in our platform, we're not a bank ourselves, so we have third party kind of banking relationships that we have that essentially your funds are stored and secured with that financial institution. So through mechanisms called safeguarding, which is basically meaning that like your money is in a segregated account with that financial institution, so it's held for your benefit, ultimately meaning that it almost effectively is very similar to you having an account with that bank, but you get the benefit of a really user-friendly UI, no fees, a fully digital interface, something that's far more user-friendly and cost-effective to use than you would get with the bank. On the back end, the reality is that your money is actually still stored with a bank, right? So your money is actually still being stored in a financial institution.
Within
Um,
like a trust account structure. It's not in Cato's bank account.
Correct. Like it's actually, technically speaking, it's called like an FBO for the benefit of account, which basically
Okay.
means like that account is essentially is held for the benefit of that underlying client, right? So it's for the benefit of David or of David's company, right? So it hasn't been really used in this sense that we're using it, but it's not a new concept by any means. It's been around for quite a while, particularly in the U.S. It's kind of newer to Canada, but it's definitely a structure that's used many times, especially with like correspondent banks and banks holding money on deposit for other banks, because oftentimes when banks are moving money across borders, they don't have their own banking license in a certain country, so they will use this structure as well. A Canadian bank might use a correspondent in the bank in the US to hold money for their clients. So it's kind of the same model that we're using. The only difference being that we are not a bank, but we're leveraging that bank's ability to hold that money.
So a company that sets up on Loop, they'll be able to receive funds in was it four different currencies: pounds, euros, US, and Canadian dollars. Right now is what
Correct.
you're after.
Yes,
Yeah.
you got it.
So they can receive currencies, and then they can swap the money between the different currency buckets, well, basically just with exchange, not with any other fees. Correct?
Correct. Yeah, exactly. So you have US dollars, you can convert them into Canadian, euros or pounds. Correct.
And then as far as using the money, spending it, you've also got some neat tools, and I think you're set up on the Mastercard platform, correct?
Yeah,
So,
exactly.
so why don't you tell us about that, about the maneuverability of the different cards, because people can just create new cards very easily, even for single purposes, correct?
Yeah, so once you have money with us, there's a few different ways that you can use it. So you have money in your Loop account. It's actually, by the way, it's very easy to also move money in from a bank account. So let's just say you have a bank account in Canada and you want to move money into our platform because you get all the convenience of using it in our platform. You can click a button and we can automatically move money from a bank account in Canada into your Loop account with us. But once it's in there, you can actually do a few different things with it. So one thing is you can actually pay a supplier anywhere in the world at no fee whatsoever. So what you can do is like, let's just say you've got US dollars and you need to make a payment to someone in the US for advertising or to buy inventory. We can send the money via ACH for you for free locally in that market. And that's a same day transaction too. So really seamless, really cost effective. Oftentimes the difference is, waiting a couple days, going into a branch and paying $50 to your bank. We can literally give you the ability to do that with one click and no fee, right? So that's one example of something we can do. Another example of something we can do is make international payments for you. So let's say you need to pay a supplier in China. You can convert that money through our platform into Chinese RMB, and then you can actually initiate that payment in a couple of clicks, and the money will be sent within one day to that supplier as well. So you can make really seamless payments anywhere in the world, whether it's locally or internationally, through our platform. Like I said, all from the comfort of your computer. And then we've also created a multi-currency Mastercard product, which is kind of what you're alluding to, which is a really interesting product. So this is very unique. I don't believe anyone else has created a product like this. Basically, what we allow you to do is you can create cards through our platform in kind of a single account. So you will have one account, like let's just say you create one card. That card, underneath that card, will actually have multiple currency balances associated with it. So normally you get your card statement and it says, you owe 5,000 Canadian dollars, right? And if you spend in US dollars, it gets converted into Canadian dollars, and your card company charges 3 to 4% as a markup,
Right.
meaning, if the exchange rate's 1.3, they'll actually show it on your card statement as 1.33 or 1.34. With our product, when you spend in US dollars, it shows up on our statement as you spent 100 US dollars. So you're not paying that back in Canadian dollars. You're actually paying it back in US dollars,
It
and
stays in its native currency.
you got it. So it's one of the first kind of credit products to be able to offer the ability to spend in different currencies and natively repay in that currency with no FX, not FX fees, no FX conversion at all. So the money actually stays natively in those balances.
Right. So if you have a company that's got purchases and customers paying you in Canadian dollars and US dollars, you can just like um, what do you call that? Like self hedge. You can just be
Yeah.
maintaining the Canadian stuff and the US stuff and keeping them separate and moving money back and forth as little as you can get away with. And that's really interesting. I know companies that try to avoid currency risk by trying to offset inputs and outputs in the same rough amounts, so that if the dollar moves, they know that they got money coming in, money going out, kind of in the same volume.
Yeah.
And this would make that really easy to manage.
Exactly. Yeah. And just some examples of this, like from an industry perspective, like the e-commerce vertical, which is like a big focus for us, is one that this is really evident in. And I'll give you the example why. Oftentimes you are spending money in the US, so you're paying for inventory, or maybe you're even paying for Facebook ads, right, to advertise your business on Facebook. When you're doing that in the US, you're actually paying in US dollars, right? But many of these companies are actually selling product into the US and earning US dollars. So today, what's happening is they're selling that product in US dollars. It's getting sent back to their bank account in Canada. They're paying an FX fee that's usually between 3 and 5% on that, as you were talking about earlier
Yeah.
with your Amazon royalties. And then they're using their card to spend on Facebook, and they're adding another 3% on top of that. So they're actually paying that 3 to 5% twice, and so they're losing 8% of every dollar that they're spending on their advertising, because they're converting it from US to Canadian and then back from Canadian to US. And we essentially, for that company, eradicate that entire pain point and all of those losses.
Yeah, and you and I were talking a little bit before, and this is why you're sort of targeting that specific industry, because you can
Yeah.
just see how much value you're able to add to that particular group.
Exactly. Yeah, because this is a problem for that, for the e-commerce industry, that is, like I said, it's super pervasive. It's all, 90+% of companies are import or export within that segment, because typically, let's say you start a Shopify store. The default now is actually to like enable sales globally. The default used to be, I believe, it would start you up in Canada and you could go in and activate other markets. Now I think the default has switched to, you start a Shopify store, you're actually like day one, your product is available internationally. And so when companies are selling internationally, this problem, hits them right away. And so that's why we think it's a really good fit for the product that we're building, because we can save those companies significant amounts to their bottom line. Like when you add this all up, the number, sounds small when I say $100, but if you're doing this on a daily basis and you're collecting thousands of dollars in revenue a day and making thousands of dollars in expenses a day, this can be tens of thousands, if not hundreds of thousands of dollars of losses as you grow a company, and we can kind of eliminate all of those losses for an e-com business.
Let's talk about the Mastercards again. You were talking about how you
Yeah.
have multi-currency cards, and within your platform, you can create new card numbers very easily, correct? And you have
Yeah.
virtual as well as plastic.
Yeah, you got it. So,
Yeah,
yeah, that's something. So I was mentioning that it's all multi-currency, and one of the cool things is that you can because these are business cards, it's essentially what we call a corporate card program. So even if you're a really small business, you still get the benefit of this, even if you're just getting started. What we allow you to do is, with a click, create unique card numbers for different use cases. You can define what those use cases are. So those use cases might be different employees on your team. Those use cases might be different suppliers you have, they might be different advertising channels you have. Maybe you want to give a card to an agency, and we give you that control for a couple reasons. One, with those unique card numbers, it makes it really easy to turn spending on and off. So let's say you give a card to an agency, and then all of a sudden you have an issue with that agency. You can literally go into our platform, click a button, and say, "I want to freeze this card." All the rest of your spending continues as normal, which is a big problem with traditional cards. Usually, if you have a normal credit card, right, with a bank, you freeze that card, everything stops, and you got to deal
Yeah.
with the hassles and nightmare of like, now my card's not working. With us, you can create specific cards for specific things and manage that card that way. Second benefit is from an expense management and kind of reporting perspective. A lot of people really like that too, because it's like really easy to tag and categorize stuff. Like, this is my card for marketing. So, with our platform, you can easily search for stuff, export transactions. You can see, I want to know how much I spent on marketing this month. You click a couple of buttons and you can see all the expenses that you had on your marketing card or on your Facebook and Google cards for the month. So a lot of really cool benefits that being able to create multiple cards offers to companies.
Yeah, back in my American Express days, we used to do purchase card programs, and this is one of the
Yeah.
key features that people were looking for because they would, again, it just depends how they want to organize. The traveling executive would have a plastic card to put things on, but then maybe they want the marketing department or even different cost centers within different departments would have their own card numbers issued. And occasionally, I even saw specific cards for vendors. So that would be often done with like the courier service, right? They give that one card number to the courier company, and that would allow, in particular with a lot of shipments, it made it easier at the end of the month. Someone could sit down with the statement and then start doing matching. For example, if they had to find some error or there was something that didn't add up, it was all concentrated on one set of statements because the courier company was only charging that one card. So it's a very, very powerful tool. How long has this been up and running then and available for people to use?
Yeah, so this new platform that we call Loop actually is brand new. We launched it in beta in January, middle of January of 2022, so just a few months ago. With it being a kind of banking and cards platform and payments platform, obviously there was a lot of heavy lifting from a build perspective and a lot to get right there. So we launched that product in beta at the beginning of the year, and then a couple of weeks ago, we went live to the public. So we launched it so that any company can now sign up on our website, which is getloop.ca is the domain that we offer all these services through versus lendingloop.ca, which is kind of what we were talking about earlier. And so with our new kind of Loop platform, companies are now able to go in and sign up, and it's a really easy. What I'll also say about it is. Signing up for our product, which gives you the same, if not better, functionality than the bank, is miles and miles apart from what it is to sign up for a bank account. You can actually get signed up and onboarded in 5 minutes. It's really that easy and seamless to open an account with us, which is drastically different, as I'm sure most people know from opening up a bank account with a traditional bank, which you're often going in person, bringing in documentation, waiting weeks. So we really try to revolutionize how all of that happens when it comes to opening accounts.
And so is there any kind of like monthly fee or anything that the customers are paying?
No. So yeah, the accounts are totally free. The card product is totally free, and the payments are totally free. The only time that companies pay any kind of like fee to us directly. So through those products, we have revenue streams which are kind of on the back end. So the companies that are using the products don't actually pay us anything. So you can access all this for free. When the only time we charge you something is when you carry any type of credit balance with us. So that credit balance could be on a card. Let's say you don't make your card payment in full by the due date, and you roll that balance over. In that case, you're obviously bearing interest on that balance. And we also have various credit products that we offer as well. So we have a line of credit now that we've launched. So originally we just offered term loans through Lending Loop. We now offer revolving credit facilities. So if you're looking to kind of do inventory purchasing or things that are kind of like shorter term in nature, where you buy something now, maybe you're selling it in 90 days, we offer a line of credit for that. And we also offer purchase order financing. So that's when a company, has larger purchase orders coming in from a Walmart or a Target or a Bed Bath and Beyond, somebody like that that's making purchase orders to the company. We can help them basically get all the inputs ready so they can fulfill that. So those are two new credit products that we're now offering, and there's obviously an associated fee because you're taking on credit from us. So that's the only time that you would pay us any type of fees for the product.
Okay. Years ago when we spoke and you were first launching the credit program, you had to deal with a bunch of hassle with the securities commissions in the different provinces because under the rules at the time you were technically offering a security for sale, and that invokes all this requirement for prospectuses and all this other kind of stuff. And you were able to negotiate some agreement with them. With this banking product, did you similarly have to get involved in a lot of the banking regulator rules and everything? How was that?
Yeah. So to make a long story short, banking regulations and like securities regulations are actually quite different. There's a number of different regulators. So we're regulated in a few different ways now. Obviously, from a securities perspective, we still have those licenses, and that exists today in terms of how we raise capital, right? But there's two other things that we now do. The first is we're what's referred to as a money services business, which is effectively in the U.S. is referred to money transmitter business. What that license allows us to do is send money on behalf of customers anywhere in the world or locally or anywhere in the world, right? So that's one regulatory license that we obtained ourselves in order to do this business. We also had to partner on the back end with a number of different financial institutions as well. So we have a few different financial institution partners that we work with, and this is kind of what we were talking about before. We aren't we aren't a bank. We aren't storing money on deposit ourselves of any customers. So we have agreements on the back end for kind of some of the money storage and the money flow. So when money needs to be stored somewhere, we have certain financial institutions partners that do that. When money needs to be moved within Canada or within the US, we have other partners that do that. When it needs to be moved internationally, we have partners that do that. So we
And so
basically
they're
built.
all licensed and everything, so you kind of get to ride on the coattails of everything that they've got in place.
Essentially, yes. Like there's parts that like kind of fall under our regulatory licenses and then parts of it that fall under their regulatory licenses. So we kind of like built a from a user perspective, what's important is it all like works and looks like magic on the front end. You click a couple of buttons and money moves from point A to point B. But on the back end, there's certain times where things are falling under our regulatory licenses and certain times where it's falling under that financial institution's regulatory licenses. Just to give you like one example of that, we are not able to issue our own Mastercards and do settlement with the Mastercard network. So we have a financial institution that we've partnered with to basically enable that flow. So they are what's called the issuer of the card. They technically issue that Mastercard, and then we manage the whole kind of program, and we manage the relationship with the customers. We manage the actual settlements to the network. So we kind of do all of the heavy lifting, but we have a partner in the background that kind of like has those licenses to be able to issue cards.
So now that you have obviously you got banking partners in at least four different jurisdictions to allow for these four different currencies, do you have other ones on the horizon? Like, are you looking to grow the number of different currencies that you can add to this mix?
I would say in the medium term, yes. Like I think in the short term, our focus is really starting to kind of like make sure our product offering is solid. Some of the features that I mentioned even are still in there in like kind of the later stages of beta. So like we're making sure that all these flows work really well for all of our customers. And there's also some like new use cases we hear about now and then about I need to pay this type, make this type of payment, or I need to get paid in this way. So I'd say our short term focus right now is really just making sure that things are really smooth operationally for our customers and that like we do have a drastically superior experience to what it's like working with a traditional bank. We think that's really important for us to differentiate ourselves. So I'd say that's the focus right now, building features like integrations into your QuickBooks, the ability to like add other users to your account so they can manage your
Mm.
finances, like all those types of things are kind of what we're focusing on right now. In the medium term, for sure, like we definitely do want to operate this in other markets. We want to offer other currencies. We want to make it available to companies that are in other jurisdictions that have the same pain point. So today we're just live in Canada. There are U.S. companies who sell into Canada, so the opposite kind of scenario that we spoke about. We don't support that today, but that's something that obviously we would love to support those companies that need Canadian accounts. And obviously we have a lot of the underlying infrastructure already to be able to create those accounts and store those funds. So it's just a question of kind of building the our program and our regulatory licenses in a way that allows us to do that. So I would say, medium to long term, that's definitely going to be the kind of next big area of focus for us.
Well, Cato, this has been a great conversation. I know people in the audience have been giving us a thumbs up, and if you're watching, please hit the thumbs up because that helps the algorithm. I keep forgetting people to ask people to do that. But so if people want to learn more, if this sounds like a solution that is going to be helpful for them, and really without any cost, it doesn't make sense to do anything other than just try it. If you think that there's a potential to be helpful, the place to go is getloop.ca.
Yeah, you got it. So it's getloop.ca. Right now, we're only available to businesses that are resident of Canada. So that is a restriction that we have. But yeah, I definitely like you said, it's a totally no fee product. There's no obligation, so you can go in, test it out, get a card with us, and see whether or not you like it. A lot of companies will start out with us in that fashion, and then kind of start to use us for more. We've actually seen, interestingly, really high conversion too from people who start with us and then look at our financing products and say like, "Hey, this could also be helpful for my business." And there's no requirement on our end. We don't say, because you're using us, you have to use us for financing. If you like someone else better or you have other arrangements, that's totally fine with us. But we are seeing people, as they start to see the value of our core products now, start looking at financing. And we think hopefully in the future that will be a big growth avenue for providing more capital to businesses as well.
Well, this is awesome. I want to thank you very much for taking the time to come out and talk with us today. And I'm going to wish you the best of luck. And it's probably going to be something that I add here to my agenda to sign up and get on the platform and give it a whiz for my own benefit.
Yeah, absolutely. No, thank you so much for having me on today. It was really great to have this be full circle, starting with what we spoke about all those years ago and going into kind of what we've been up to. So this was an awesome conversation.
All right, Cato. Thank you very much and have a great night. Okay.
Likewise, you too.
All right. So, how can you learn more about buying, selling, financing, and managing small and medium sized businesses? Easy. Head over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and the online courses that I've prepared for you. You can find out about how to subscribe to my email list, the YouTube playlists, etc. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go out to Jeff Alpaugh Customs for being my tailor. Men all around the world can look dangerous, just like me, with the help of Jeff Alpaugh Customs. JeffAlpaugh.com. Use the code DCB10 to save. They handle multiple currencies and ship anywhere you happen to be.